What's up, everybody? Welcome to Heresy Financial. We have had a crazy and wild week in the stock market, especially considering everything that has been happening politically lately. So in this video, we're going to dive in to the last week and what that might mean moving forward. Let's dive in. First of all, I hope you guys are all having a great weekend. Sometimes it is necessary to kind of pull back and get away from some of the noise, especially when you're coming up on an election. It just seems like everywhere you look, everybody is shouting their opinions about politics. And so in this video for the weekend, I'd like to give you a little bit of a mood boost, and we're going to look at some things that will probably look very hopeful for you going forward, and that is the setup in the markets. Now, I could be wrong. I have been wrong before, but it looks like what I've been saying for the past couple of months is now starting to happen. It looks like we are starting to enter into sort of a melt-up stage in the markets. And I know I was saying that before we kind of had that sell-off at the beginning of September. Looking back on that, that was kind of expected that we'd have that sell-off and some volatility, but the setup right now, man, it is looking really bullish. First off, we have the major indices. We have the S&P 500, the Russell 2000, the NASDAQ, and the Dow. These have all made pretty convincing upside down head and shoulder patterns. And any technical analysis, anytime somebody talks about technical analysis, really all chart patterns are just visualizations of what the crowd is doing, of what the momentum is doing. They're just visualizations of what happens when buyers and sellers come together and determine a price over time. And so an upside down head and shoulders pattern, or even a regular head and shoulders pattern, these are just patterns that indicate that the price action, the people who thought that it should go down or up one way or the other, were kind of overruled by the investors on the other side of the market, and that indicates that the price action will move in the opposite direction of wherever that head was. And so on the S&P 500, this is probably the most easy way to visualize this. I'll throw it up on the screen now. You see a line at 3,400, and this is called the neckline. Now, right above 3,300 is where the shoulders kind of came up and almost touched there. And of course, it's upside down, so they came down and touched there. And then at 3,200 is where that head peaked. Now, when a head and shoulders pattern is confirmed, meaning that the neckline is broken, then the typical move that you would expect to see after that neckline is broken and that breakout is sustained is that you would have a magnitude move that is equal to the difference between the neckline and the top of the head, which would put the S&P 500 at 3,600. It was a 200-point movement from 3,200 to 3,400, which was the neckline to the top of the head, and so a 200-point movement past there puts it up at 3,600. Now, we are well on our way, closing close to 3,500 for the S&P 500 today, and we can see a similar pattern across the other indices as well. Now, a lot of this move can be attributed to what happened this week, where we had a big sell-off that caused kind of the last leg of this shoulder formation, because the sell-off happened when Trump basically said he was walking away from the negotiations table. No bill was going to happen. Now it's looking like he's coming back in, kind of the opposite direction. He said on Friday that he wants a bigger stimulus bill than either party is asking for right now. At the same time, earlier that day, McConnell said that it was unlikely a bill would happen before the election, and markets were still rallying on that. And so this is part of what I mean when I say it looks like we're entering a melt-up phase, because contradictory news, when they happen, are now becoming both bullish. And so news that used to be bearish, where there was not going to be a bill to happen until after the election, that caused a sell-off earlier in the week. And now when that news happens, it makes the markets go up, along with the news that a bigger bill will happen. Add on to that the fact that when you do have a sell-off, you have a shakeout of weak hands. The people who didn't sell during that last drop aren't going to sell now while it's rallying, and all the cash on the sidelines starts to get into that fear of missing out stage where they start piling back in. Despite what most people think, the market sentiment isn't at a euphoric stage right now. We did have a little bit of euphoria come in at the end of August, but we haven't seen a blow off top. We haven't seen a melt up. We haven't seen this sense of euphoria that the market can only go up. Yes, that was being said by some people like Dave Portnoy, but that wasn't the general consensus. There's still a lot of cash on the sidelines waiting until the uncertainty of the election passes. And especially if the election happens with a lot less uncertainty than the market is pricing in. If there's no contested election, if one candidate wins by a large margin, either way, you should expect to see that uncertainty leave the market and that the rest of the bullish movement to happen once that election is over with. Now, in other news, we're starting to see a rally again in gold, and it looks like gold may have finally broken out of this downward trend that it's been in. And so we'll look to see if that sustains, because if this breakout sustains and we do resume an upward rally, we could start to see the short squeeze on the gold trading desks at the banks really start to take over. We could start to see a big pop in gold prices towards the end of the year, especially as the end of the year is usually provides a lot of tailwinds for the price of gold fundamentally due to buying conditions around the globe. Same thing is happening with silver. We had a big rally in silver on Friday. And so again, waiting to see if this is just a kind of a dead cat bounce, if you will, before this really strong downtrend over the last month or so, 2 months or so in silver has been going on, or whether this is finally the reversal and we're going to get back up into the uptrend for silver. Bitcoin finally broke above its $11,000 mark as Square announced that they were making a large acquisition. I talked about the acquisition of Bitcoin for MicroStrategy. They put about $500 million into Bitcoin over the last couple of months. And then on Thursday, I believe it was, Square announced that they had put about $50 million of their cash balance into Bitcoin. And just judging by Jack Dorsey and his views on Bitcoin and cryptocurrency and the direction of Square as a company involved in Bitcoin and open source technology related to cryptocurrency, I would not be surprised to see that number just continually increase over the next couple of months. They'll continue to announce, hey, we've acquired another 50 million, 100 million or so as time goes on. And so this will probably continue to be a tailwind in the price of Bitcoin for the foreseeable future, at least in the short term. Now, as always, I always say stay hedged, stay protected. I don't ever like going completely long or completely short because the question that I always ask first is based on all the information that I know, what do I think is the most likely outcome? And I'll invest according to that. And the second question I always ask myself is, what's the absolute worst that could happen if I'm at 100% completely wrong? And I'll make sure I'm protecting myself against that outcome as well. So as we enter into a time of potentially more turmoil, more conflict, more tensions, hopefully this video provides you with a little bit of good news, something to look forward to, at least in the markets over the next couple of weeks. As always, really appreciate you guys. You're the best. Have a great day.